Very good evening, friends. At the outset, let me welcome each and every one of you for this special program exclusively designed, crafted, and filtered for our participants, members, students across length and breadth of the country. The topic today is very important topic, very different one. This is about the latest new scheme that has been announced by Government of India, Income Tax Department. Very cutely, they have named this as FASTDS 2026, Fast DS, Foreign Assets of Small Taxpayers. FAST, FA Foreign Assets, ST is Small Taxpayers, and disclosure scheme. They will be voluntarily disclosing. Important point here is we have transactions happening, not hundreds, thousands, but lakhs of Indians. They travel abroad, settle there, earn there, they again come back here, settle here. What happens? They leave a trace asset in foreign country. They accumulate assets in foreign country. People who are resident here and they have foreign assets outside India, there is a catch here. Indian Income Tax Act makes it very clear that if you are resident here, Indian income is also taxable, foreign income is also taxable. Now, from the foreign income, you accumulate assets. That means income is in the form of assets. So, neither I have disclosed my income or I have disclosed my assets. That means I should have paid tax on income or I should have paid tax on the assets. Now, why all these new things are coming? It's because of 2 years back, exactly 2 years back, we had the G20 in India, and our Pradhan Mantri hosted the entire world in India, in various parts. From that moment, and even before that also, exchange of informations are happening. Now today, Government of India is having huge data about Indian residents who have assets outside India. Meaning, whether that means they were resident here, but they have assets outside India. So they have to come out very clear whether it is accumulated from the foreign income, which is not taxable here, and the asset accumulated there. That means only disclosure is the issue. So much of these things are there. Now, with this small brief, I'll invite on stage Chartered Accountant, Senior Member of Institute of ICAI, CAVV Sampath Kumarji, to lead this session, steer this program as Partha Sarathi of this FASTDS 2026. Let me hand over this session in the safe hands of CAVVSG. Over to VVSG.
And Dr. Raju and my dear friends, I'm very glad to enrich my knowledge in this newest topic, which is less than a week, not even a week is over as of today, by the issuance of the notification about this important historical development with respect to the quality of income tax compliance and disclosures. If this is done in time, in this new era of a growing global village concept of information explosion, if it is not done, it can be easily tracked because of the development in technology, so many things are happening, AI, this, that. And that too rightly mentioned by Dr. Raju with respect to G20, there is an understanding between the country to country to share this type of vital information. Keeping this overall in mind, there is an imperative need to know about this new scheme and to comply with that in time without any further difficulty. There are a lot of questions or the points to be discussed within the given time. I'd like to go directly into the topic with the background that has been set in by Dr. Raju. Dr. Raju, this fast scheme is very fast. Foreign assets of small taxpayers scheme. What are the disclosure scheme this 2026? What is it all about? Briefest brief possible, because as you know, I have to cover a lot of questions. I have prepared it and kindly help me in making as brief as possible. Definitely covering the basic tenets of the particular scheme.
Well, this is a very simple scheme of voluntary disclosure. In case, I'll give you an example. I am born here in India. I am resident in India, but I have some transactions outside India. I do some business outside India, along with somebody. I'm a partnership with someone. I opened a bank account in Singapore, and I earn some income, maybe some business share, or I'm a beneficiary owner of a particular company, maybe as a shareholder or as a partner, and I earn income and I keep that money there itself. Maybe I even buy some asset also, maybe gold movable, car movable, immovable property, anything. Now I sit in India, I earn income abroad. Now, Income Tax Act makes it very clear that if you are resident in India, you have earned income, you have to pay tax here. So I only for Indian income, I am declaring in my income tax return pay tax. For my foreign income sitting here, I earn. Whether I pay tax in that particular country is the second question. Technically, if you pay tax there, declare here, get the credit that I already paid tax there. So please don't tax me here. Now, there are many such people unknowingly, knowingly or unknowingly, okay, with knowledge of law or without knowledge of law, they have ignored, to disclose the foreign income or assets earned from that foreign income being a resident here. Now, the government says, okay, I have to tax you, no problem. I will pardon you. Whatever is the assets there or income you have earned, please declare now. Please declare now. Pay tax and come out clean. Very simple, come out clean. So, FAST is a voluntary disclosure scheme, meaning those assets on which I should have paid tax, I have not paid. Number one. For example, I'll give you an example. Dubai, there is no tax. So foreign income not taxable there, but I'm resident here. So I should have paid tax here. So I am not paid tax. Number two, in Australia, I have earned income, I paid tax there. So even though I declare it here, I need not pay tax. But from that income, I have accumulated some asset. So that asset I will declare here. So meaning very important, I will declare that asset here. And only declaration of the asset is sufficient. So if in one country you have paid tax, only disclosure is the problem. They say pay some fees, maaf karunga, you are pardoned. So if income itself is not disclosed, tax is not paid in any of the country. In India, as a resident, you have to pay tax with an additional tax. So this is the background. So very simply, we will try to understand, sir, by maybe as a layman. So I'm here as a layman. Maybe you can reflect any assessee's mindset, and we'll try to unravel the mystery of this FAST DS 2026.
Okay, Dr. Raju, you have said that it is a voluntary scheme to come clean. That means many of the small taxpayers might not have complied for early years. Come disclose, pay if it is payable, and come clean is the briefest of the thing what I understand. This scheme is for a particular period, as I understand. What is the date of commencement of this scheme? First scheme.
Actually, this has actually started in Finance Act itself. So, when Honorable Finance Minister Madam presented in the Parliament, so this came as part of the Finance Act 2026. So, the Foreign Assets of Small Taxpayers Disclosure Scheme 2026 came in Finance Act itself. Only thing is the applicable date was not mentioned. Now they have published a rule. The rule came only on 14th of August 2026, applicable from 16th of August 2026. So the applicable date is 16th August and it will close on 31st of December 2026.
So you mean to say this has been disclosed in the Finance Act? I think relevant sections 130 to 144 or something in the Act itself, but operability came subsequent to the notification. So initially, what I made, it's a 1 week baby, which is a full scheme is operable with effect from 16th August. When it is starting from 16th August, what is the duration within which I have to comply if I want to comply?
You have the duration here refers to I have to file a declaration. So
Yeah.
the being a voluntary declaration, so this is actually a disclosure scheme. So therefore, I have to voluntarily disclose. When I have to voluntarily disclose? So, before 31st of December. Now,
So,
yes, sir.
sorry, 31st December, the window is open from 16th. Sorry to have interrupted you because my concern is we have to cover and effectively a wholesome presentation to our participation. So it is 16th August to 31st December, end of this year, correct?
Yes.
Now, when I hold certain assets, the valuation has to be done with respect to the asset concerned. Earning income is respective year, but whereas when an asset is held in whatever immovable or movable format, what is the valuation date? In valuation, the criteria is purpose and then the date of valuation. So, what is the valuation date that is to be reckoned for the purposes of compliance of this first scheme?
VBSG actually, if the money is kept in money form, valuation is not required. Maybe if I keep the money in FD form, the money in bank itself, it as a deposit is there. So then the question of valuation will not come. But if I keep the income, or if I accumulate the income other than in bank account or in deposit, so how I will accumulate it? Jewelry, any movable assets. So it can be an immovable property. It can be an investment in some companies, jewelry. So various assets, maybe a work of art, a painting. Okay, so in various forms of assets. So I may keep my income. I may accumulate my income in various forms. So then the necessity to do the valuation. Now the challenge here is I am a resident. At that point of time, I have earned income. Maybe I have earned income, maybe in Australian dollars, let us presume. 7 years back, I earned that money, which is 1 million Australian dollar. 1 million Australian dollar is 10 lakh Australian dollars. So now 10 lakh Australian dollars 7 years back, I bought a house property using that 1 million Australian dollar. Now, when you declare as on 31st March 2026, I'm not supposed to say I have a immovable property in Australia, which I bought for the cost of acquisition is 1 million US dollar. No, I should declare my cost of acquisition, the fair market value, the value as on 31st of March 2026. Maybe 7 years it would have been doubled also. So it will not be 1 million Australian dollar, it will be 2 million Australian dollar. And the 2 million Australian dollar I have to multiply into the exchange rate of Australian dollar equivalent to INR. Maybe if I multiply the exchange rate for 1 million Australian dollar at that particular exchange rate, it would have been much lesser. So that is where the valuation plays a significant role in this disclosure scheme. So if I have the assets, if I have the foreign assets other than in deposit form, in bank form, then valuation is must necessary. And the law says you take the valuation report from that particular country who is a approved valuer. So very interestingly, they use that terminology. So you can take the approved valuer in that respective country. So in that respective nation, you can take the valuation report. And you have, when you give the declaration, the voluntary declaration, that particular report also has to be attached. I repeat, it has to be attached. They use a word called obtain a valuation report from a valuer recognized by the government of a country or specified territory outside India in which the property is located. So they have made it very clear.
So the valuation report of the relevant country, it is not historical cost, it is the fair market valuation on the relevant date being 31st March 2026 in this current year for our discussion. And which income tax authority administers these declarations under the FAST scheme?
Well, this entire disclosure, this voluntary disclosure or voluntary declaration is actually in electronic form. So there is a form they have given, it's form number 1. You have to give it in electronic form. And that electronic form has to be submitted online only through your PAN login. Now, point to be noted here that the authority will be the Principal Director General of Income Tax Systems, because it's actually the technical side of it. So the Director General of Income Tax System or the Principal Director General of Income Tax System, they will be the income tax authority who will give. It is like first you declare, they will give you an order to pay the tax, then you pay the tax, then they'll give you a final order. So all this will happen online.
You told the principal director of IT systems. I mistook it of information technology. You rightly clarified it is income tax system, principal director. That's good. And who is an assessee eligible to declare under this scheme?
Actually, very important question. Actually, this should be the first question. And resident. The point here is resident. So today I am a resident, and most importantly, today I may be a non-resident also, but the year in which I earned income, the year in which I accumulated asset, that year I should be resident. Very important. You are filing current year from 16th of August to 31st of December, I will file the declaration in Form 1. Now, you may be a non-resident today. You may be a resident today, but most important, I must be a resident at the point of the horse. So which year? 2016-17 I earned income. 2016-17 financial year, I purchased that property. In that year, are you resident in India? Eligible. This year I am
So,
resident, that year I am non-resident. No.
so the
Because
critical point is the year of earning the income or the purchase of the asset, not the date of 31st March. It is the year of purchase as mentioned by you, 2016 income or 2000 income asset purchase is to be declared as of 31st March 20. So I have to see all my earlier records and see the things, and one important general observation, the scheme is applicable to those who acquired the asset or earned income, assuming they are in a foreign country. It is the professionals and the relatives, they should take up this scheme with those person who invested or earned to make it more popular to have a quality of compliance. In this regard, If a person is presently non-resident, still make a declaration. You clarified that point. It may be today a non-resident, but the timing of sourcing of the earning of the income or the purchasing of the asset. There is one more category of the resident, RNOR, resident, but not ordinarily resident. What is the relevance of such a category of persons in this scheme?
Current year, that is because I'm going to give a declaration in form number one in 26-27. In this particular financial year, 26-27, I'll give the declaration. Now, in current year, I may be non-resident. I may be not ordinary resident also. Now, who is a not ordinary resident? A person who come and go, or he may even be a deemed resident. Those who have income above 15 lakhs from India, but they are non-resident. So they will also be treated as a deemed resident. So, but for the purpose, they will be not resident, but not ordinary resident. But for the taxation purpose, they will be treated as a deemed resident. So very interesting terminology. So point is, current year, whether they are not ordinary resident, non-resident, resident, doesn't matter. What matters is, during the course of the past years, when the person has earned income or accumulated assets in foreign country, was he resident in India? If he was resident in India at that point of time, in today, if he is resident also, this scheme is applicable. Today he is non-resident also, this scheme is applicable. Today he is not ordinary resident also, this scheme is applicable.
Okay, thank you very much. The declaration window is open from 16th of August till 31st of December. You highlighted about it, and the valuation date is 31st March. The declaration, the year time of purchase of asset or the earning of income, you highlighted. Now, every year in that declaration, year-wise declaration will be given because the date, because past years can I give separately, current year separately, or in this one declaration for all the years you have, how many years or what is that detail about?
Can you repeat the question, sir?
I am complying on 31/3/2026, my declaration within the given time using the format. In our example, we stated about the income earned during 2016 or asset purchase in our 2016. So the declaration, separate declaration for each year, or as of 31/3/2026, whatever the earlier years in one declaration.
Only one declaration.
Okay.
So for
Now, what?
example,
Yeah.
16-17, I bought a property. 3 years later, 19-20, I bought second property. So now I have two properties in two different years. Now, should I have to file two different declaration? No, only one declaration for both the properties, either cost, historical cost total, or fair market value as on 31/3/2026. Naturally, fair market value as on 31/3/2026 will be higher. So higher only I have to take.
There is
Now
a doubt.
there will be a difficulty. No, 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 no. I don't know any valuer there. What to do? I know the cost. Then they give a alternative. What is alternative? We have this indexation given in our income tax act. So that means 2 lakh Australian dollar in 16-17, 5 lakh Australian dollar in 19-20. So on 2 lakh Australian dollar in 16-17, I will apply the inflation index, the cost inflation index. I'll bring it to 31st March 2026. 19-20, I'll apply the cost inflation index, arrive at 31st March 2026. So that indexed cost of acquisition will be deemed fair market value.
That deemed to be is very convenient, whether only when it is not available or I can straight away go in for the indexation.
That's a good point. Actually, they make it very clear. They give a answer that see, because valuer has to be found, you have to find the registered valuer and all this stuff. They say obtain a valuation report from a valuer recognized by the government of a country. Now, I'm sitting here now. How do I go and find? So therefore, they give a proviso. They give a proviso which says that provided that index cost of acquisition shall be deemed to be fair market value where the valuation is not carried out. So that means it is not mandated that you should only get the valuation report from there. So therefore, cost inflation index we can take
Yeah,
for doing the valuation.
it's a
Simple.
very relevant. It's a relevant proviso because the cost, resources, and time involved can be mitigated by adopting the indexation. Maybe the practical quickest remedy for that. Now, 31/3/26 is the valuation date. I acquired in 16/17 earned income before 31/3/26. If I have liquidated the asset or whatever that I don't have anything, there is no need for declaration at all.
Because
31/3/26 is the relevant date.
very good. Now you have an asset, you liquidated it.
Yeah.
That money will be in some other form.
Okay. If I already
That money
brought
will
into
be in
India, if I had brought into India already through the channel, my question is, as of 31/3, this declaration is needed and to be complied with. As on 31/3/26, if there is no foreign asset at all by a resident, I think the scheme should not be made applicable at all because he has become a resident.
It is not like that. It is not like that, sir.
Mm, mm, mm,
Because in the scheme, in the fast DS scheme,
mm,
there is a section which is called as 133.
mm.
That 133
Yeah.
says you are in which category? You are in which category?
And just the next question is
So,
the categories of declarations. Sorry.
so that is where the importance is. So now I am a very good person. I have earned income. I paid tax. Only from the paid tax I have bought the asset. So that means, for example, I was a professor in Melbourne University. I earned money there in Melbourne University, paid taxes to Australian government. Just because I am a non-residenter, why should I pay tax to India? But I earned there, paid tax there. I bought a property there, kept it there. Now after retirement, I came back here. Now that Australian property rental income I'm declaring in India, I'm paying tax, but the asset I'm not declared. So I have not made any income I earned, not paid tax. That offense I have not done. So please, we have to understand the difference between offense and non-disclosure. What is an offense? I earn, I have not paid tax. I earn, I have not paid tax. The earnings is in some form. If earnings will be in the bank account itself, or earnings will be in some asset form. So I made an offense by earning income, not paying tax. Now I have not made an offense by earning income, not paying. I paid tax. That means not an offense. I have already complied. I accumulated that paid tax income in the form of assets. Now, being a resident in India, the income tax return says foreign assets you declare. So I don't declare it. So then non-disclosure alone is my is a small. I will not say it is not an offense. It is a disclosure I should have made. I have not made. I should have been more.
It's a lapse on the part of
Lapse. So therefore, they say no penalty, no tax. We'll only levy you a one-time fee. One fee alone will levy.
Okay. Now there are
We have to understand very clearly between these two.
Yeah.
Have you made an offense or non-disclosure?
That is the fundamental edifice with which the categories arises. There are two terminologies: undisclosed asset located outside India and undisclosed foreign income.
Yeah.
I think just now you narrated about the
So
declared.
this is category one. This is category one. This is an offense. So
Yeah.
that means let us take a year. So 2019-20. 1920 in Singapore, I earned money. Okay. Now, if I was a non-resident there, I earned money, I would have paid tax there. But I'm resident here. So I went to Singapore, stayed there for 3 months, earned money there, and deposited that money in a bank account there in Singapore and came back.
Mm.
Good. Now, 9 months I'm in India, chup chop for 9 months income only I pay tax to Indian government. The 3 months income I didn't pay tax.
There.
Maybe I would have paid tax in Singapore, but I should have disclosed here. So this is undisclosed foreign income. Actually, what I should have done, being a resident, disclose that. Say I have already paid tax, I'm taking credit of it. And I should have done that. I have not done that. Number one. Number two, maybe that income I have accumulated in bank account, then bank balance I will take, or I would have converted into some asset. So what is that income? So how do I? So either it should be in the form of bank balance, so or it should be in the form of an asset. Now, Sir made one point. I earned money, I purchased an asset, I sold the asset, I spent that money. Now I'm pauper. I don't have anything. Now what do I do? So then you don't have an undisclosed asset located outside India, but you had an undisclosed foreign income, which you should have done. Now government is having that evidence of that. So it is like for the old papam, you have to pay the penalty.
Punya
To
today
the
by
Punya.
company.
Correct.
Now there are that Finance Act 133 to 140 or whatever the sections. In 133, is there any subcategory of different tables? One for one table one, one table two, and the threshold for each of the table. Can you enlighten on that?
Now this is where the small taxpayers will come. ST.
Ah.
Now who is the small taxpayer? So all my past income, which on which I have not paid tax, now I will pay tax. Because I was a resident at that point of time. Okay, I should have. Now people can even claim. People can even claim that I have actually paid tax in the foreign country. I repeat, I have paid tax in the foreign country. Now, normally paying tax in the foreign country is only for a non-resident. If I'm a non-resident at that point of time, I would have paid tax. So now that question will not arise here. So I'll come to the first category. You are a resident here, you went abroad, earned money, and you have an asset. Now this category is very serious category because you should have declared in India and you should have paid tax. So for them they say it's almost like a undisclosed income in Indian Income Tax Act. The section is 60% is tax. So the same 60% they are levying here, but 30% tax and 30% additional tax. So that means if there was an undisclosed income, okay. Now majority cases undisclosed income will not be there. It will only be in the form of undisclosed assets. Because money earned abroad, people would have kept it in some form. So what Sir said will be a very rare circumstances. I earned money and I spent the money. So then undisclosed income part alone will come. So that valuation as on 31st March will not be there. And maybe it is only a voluntary disclosure. Unless and otherwise government is having some information, they may come back and ask me. Better to come out clean. So 99.99% cases, evidence means there are some assets. If there are some assets, meaning I earned income there. Either I should have taken money outside India and bought the asset there. Then what is the why he shouldn't declare it? Because it's from money from here only it has gone there. But money earned abroad, converted to asset, that is where majority of the circumstances will be there. So
Resident earning income or creating an asset is the fundamental crux, which has got a thing. And income, if it is spent, may not have any difficulty. But asset created and liquidated before the critical date may have its own implication. And I also highlighted about the quantum of tax payable. Also, you highlighted about it. Is there any significance of the aggregate value of assets located outside India more than the particular magical number 6.5 crore, for example? What is the significance of that?
Yeah. So, for example, it is not income. So, the income or assets not disclosed, we have a small taxpayers limit of 1 crore. Similarly, income I have earned abroad as a non-resident, I have accumulated assets there, but I have not disclosed the asset only here. So, non-disclosure asset is only it's only a lapse. For that, I have to only pay fee. The limit is 5 crore, 5 crore INR. So
Oh,
assets located outside India not disclosed, but
hmm.
income earned for buying that particular asset, for acquiring that asset, taxes paid in the foreign country,
Hmm.
or the income earned in foreign country, I have also declared in India being a resident here. So I have paid tax in India, or for example, Dubai I earned, I paid tax in India, but I accumulated assets in Dubai. Then I should have declared in my income tax return. I am not declared. So that alone I will declare now by paying a fee of 1 lakh rupee. That's all. It's a flat fee.
Raji, you highlighted about the valuation, fair market value. What is the
Yeah.
approach that should be adopted to computing the fair market value?
Well, they give a they give a very simple model. If it is for almost all assets, they use a word called open market price. That means market price. If it is jewelry, if it is any movable assets, for example, the various types of assets, what they mention is bullion, jewelry, precious stone, archaeological collections, drawings, paintings, sculptures, work of art. For all this, it is only open market price. But if it is shares and securities, for example, I keep equity shares in a limited company or private limited company abroad. So then they use very same income tax formula only, asset minus liabilities. But when you take the asset, should I have to take book value? Yes, you have to take the book value only, but only for except for three assets. If it is immovable property, very similar to India, you have to take the government value of that particular rate. So that will be your, as here we say stamp duty value or circle rate. Similarly, we have to take the government value rate at that. So what is there in the book will not be considered as far as immovable property is concerned. So very similar, if jewelry is there, we have to take the market price. If that company is invested in another company, same model we have to follow to arrive at the fair market value. So that I will take the asset minus liability. So that will be the net worth divided by the number of shares. I will get the equity share price, which will be the fair market value.
So you touched about the various categories of assets like precious metal, jewelry, bullion, and archaeological collections, and also quoted shares and unquoted shares in private listed company. Everything highlighting about the cost can be the basis with respect to certain category, and the asset minus liability, the net asset value can be the divided by number of shares is the basis for arriving at the foreign, yeah, fair market valuation. And explain with an example, if the account was already declared under the relevant Black Money Act, will it have any implication or the benefit or advantage under this scheme?
Meaning, there are two things. If assessment is already completed, we cannot declare.
Ah,
Now assessment is going on. So that means proceeding is going on under Black Money Act. People
hmm,
can come under this and declare. So for example, there are notices under Black Money Act.
hmm.
And the proceedings, I have to give a reply. I have given a reply and waiting for. Now what to do? Now you have a scheme. People can voluntarily disclose, pay tax 60%. Patafat, over.
So
Now, proceeding.
initiation of a scheme is not a bar, but completion of a proceeding may not be eligible.
Yeah. Now, what will happen is this will be considered in uh, the what do you call Binami Property Transfer, that Black Money Act. Now, point number two, there will be immunity from because penalty,
Ah,
because tax and additional tax you pay. So it's almost equivalent to the interest part. So
okay.
immunity from the penalty will be there. So no penalty will be levied.
Is there any specific guidelines mentioned for interest in a foreign firm, partnership firm, or AOP or LLP under this scheme with
Interest,
respect
yeah.
to
Say
FME?
in case uh, I am a partner in a Singapore company. I have 48% stakes in that. I'm a beneficial owner. So technically, you can call it as a beneficial owner. So then I have to take my 48% value from that balance sheet. So very similar to say A plus B minus L, I have to do. So A, B, C, D minus liabilities. So I will take the book value minus liabilities, and on that I will take 48% because my interest is 48%. Now, when you have maybe a immovable property, I have to take the market value of the immovable property. Then only I have to arrive at the net worth. So same model. Only thing is, whatever is my beneficial interest, I will apply the percentage on that net worth to get my value as on 30th March.
So, fair market value of various categories of assets has been explicitly mentioned. There may be assets, at least theoretically or practically also, asset not listed, let us call residuary assets. How that FMV has to be, fair market value is to be ascertained.
Actually, if it is listed in the foreign country, very simple. We'll take the upper price, or the we will take the last week up and low price average we can take. But if it is unlisted, we have to only go by ABCD minus liability. Very similar model in Income Tax Act. The rule specifies. So we'll take the book value, and wherever we have to take the market value, we will take. If jewelry is there, we have to take market value. If equity shares is there, we have to take the fair market value, and then minus the book value liabilities, arrive at the net worth, and then divide by the number of shares.
Now, I create and buy an asset there. After some time, I sell off this asset and acquire another asset, new asset. What is the treatment under the scheme 5? Hiving off the old asset and getting a new asset. What is the treatment?
Actually, it means it is replaced by a new asset. So only the new
Yes.
assets valuation as on 31st March 2026 will be taken.
Okay, okay.
So it's
And
like,
with
yeah,
respect to foreign currency held in currency, it is the currency valuation conversion value. Am I right?
conversion value. They have given the six currency standard currencies, designated currencies. So US dollar, Canadian dollar, Australian dollar, then you have euro. So like that, six currencies. Yen is there. Apart from the six currency, because you will have the direct INR rate. So
Mm.
if it is any other currency, we have to convert to US dollar, then US dollar to INR.
So indirect valuation, not direct, indirect.
For
Okay. Now,
example, Dubai means dirhams. I have a property in Dubai. So it is actually 2 lakh dirhams. So 2 lakh dirham I have to convert to US dollar, and US dollar I will convert to
Indian
INR.
rate. Now, there are situations where I give a declarations because of the income and because of the asset. Will that declaration be treated as invalid merely because the value declared in my declaration differs from the value later determined by the officer? Will there be there is a possibility of a variation in my valuation and that of the department? What happens?
Definitely. For that, they have given a cushion. So that cushion is like a safe harbor. That safe harbor is 20%. For example, I give a declaration of 80 lakhs, but the because it is only declaration, I need not pay tax. Form 1 is declaration. Form 2 is confirmation by the department that okay, we accept it. This will be our tax amount. Now, they there will be actual valuation may not be 80 lakhs. It will be, say, let us say 90 lakhs. So 90 and 80, the difference is 10 lakhs. 10 lakhs out of 80 lakhs is hardly 12.5%, which is less than 20%. So therefore, even though it is 90 lakhs, declaration of 80 lakhs will be taken. So tax will be only on 80 lakhs, not on 90 lakhs.
So
Unless there is a
variation tolerance permitted is 20 percentage.
20%. Safe harbor is 20%.
Now, having dwelled about these aspects involved, if I want to initiate the steps in complying with that, we highlighted about Form 1, Form 2, whatever that. How and where the declaration is to be filed. How and where the declaration, the Form 1 or
In your
whatever that.
in our login, so in incometax.gov.in, in our PAN login, so we have to that form will be available, so
Okay.
we can fill that form and upload it. So once we fill the form and upload it, department will take 1 month to go through that form. And for example, if I file it today, and month end, from this month end 31st August, 1 month will be 30th of September. So they may pass an order on 30th of September. From 30th of September, I have 2 months to pay the tax. Then October, November. So I have to pay the tax by November. Maybe if I don't pay the tax by November, I can pay tax in December, but I have to pay with interest of 1%. So that is how, and I cannot go beyond 4 months. Maximum 4 months only I can delay.
You highlighted in one of the earlier questions, very rightly highlighted, whether there can be multiple declaration or a single declaration. You very hastily clarified that it is only one declaration across the years as on the particular relevant date of 31st March, both for income as well for the assets. Now, is there any asset wise or income wise separate declaration form one or only one? That there I asked year wise. Now it is asset wise, income wise is also one form or multiple forms.
Well, so actually, if that form number one, we have to give what is the category type of category one, category two, whether it is a
Income.
violation or it is only non-disclosure.
Correct.
Then it will be a total number. Then after that, there is an annexure to form one. In annexure to form one, I have to give asset-wise detail. So in asset-wise detail, say for example, it is about immovable property. So immovable property, I have to give the name of the property, like it is a building, flat, apartment, or a commercial property. Address I have to give. Country, that is a location I have to give, which country it is. And under whose name it is held. Sometimes it will be in the assessee name, sometimes it will be in somebody else's name, but I will be the beneficial owner. So that also I should mention. And the date of acquisition I have to mention. So very important. And what is the total cost of acquisition? And indexed cost of acquisition or estimated value, and what is the fair market value. So I have to take any one of this. So not necessary I have to fill up the fair market value as per the valuation report. If I give the acquisition cost and index cost, that is sufficient. Fair market value, we can even say dash, then we can take the index cost of acquisition. But
So,
this will be a drop down will be there. If you want to add one more, you can add. One more you can add. So year wise, you can add as many assets as possible.
so it's only one declaration for across the year, across assets, across the categories of either income or the asset. It's only one form. Now, once I when I declare the form one declaration, what happens at the other end? What is the processing? What is the methodology?
So once I file the form number one, department will take 1 month to pass an order. So declaration, order, then I have to pay tax. After payment of taxes, it's called payment. Okay, so payment I have to give again one one form I have to file. Then final order. So final order will be the completion of this fast days. So declaration, I will not pay tax. I will only give the list of assets, its value.
Okay.
And 1 month, within 1 month the time, government the principal director general of income tax system will send you an order online. So confirming what is the tax amount. Now I have to pay the tax and then intimate. So this third step is called intimation. Form 1 declaration, Form 2 order, Form 1 declaration by the assessee, Form 2 order by the Principal Director General Income Tax Systems confirming the tax amount. I have to pay the tax, then intimate in form number 3 that I paid the tax with evidences. After that, in form number 4, final order will be passed that the entire uh, process is over, and
It
the
comes to
government
it.
has taken note of it.
So Form 1 declaration, Form 2 order, Form 3 intimation, Form 4 is an order is the process explained very nicely. You said I have to pay once I receive the order. Within which time I am supposed to pay the taxes involved?
Within 2 months' time. For example, in August, uh, I filed the form number 1. I'll get the order in
September.
September 30th. From September 30th, 2 months' time is there. So that means October, November 30th. So within November 30th, I have to pay tax. So 60 days time is there for payment of taxes.
For any reason, if I am unable to pay the amount within the given time, what happens?
Interest, 1% interest per month,
How long? That is,
maximum
what is the
2 months.
openness of the scheme?
4 months.
From that entire before December or from the date of my order 4 months?
From the date of order, 4 months.
So, effectively, if I receive an order on, say, for example, on 31st of December, before February end, January and February, I should pay the amount.
So
Or
that means
within 4
we will have
months.
only 4 months time. 120 days are given.
Okay, okay, okay.
60 days no interest, another 60 days with interest.
So, if I don't comply even during that particular extended time of interest tenor, 4 months, 2
Uh,
plus 2, what happens?
uh. It is very easy for the department because already the assessee has given a declaration. So number one, so Black Money Act notice can be issued. Number one. Number two, money laundering, benami property transaction. So whichever law is convenient, department can take an action. So Black Money Act notice under Section 25 of the Black Money Act will be definite, certain, which will be there
Dr.
because
Rajesh,
already. Yeah.
sorry to interrupt, there is a practical difficulty for a particular situation where he has got an asset, he has declared, there is an assessment. You don't have the liquidity to pay the 4 months is too short a window. What happens? What's your
That's
experience and suggestion or an approach? Because it's a reality. I want to come clean. I want to cooperate. Liquidity is the problem because everything is held in asset.
that is where better to plan. So because
Yeah.
4 months time is available, so
Mm.
that's the place where the associate have to sit with the professional chartered
Yeah.
accountant,
Mm.
discuss with them what will be the consequences. So
Mm.
see, asset is in abroad. He
Mm.
is in India. Now he
Mm.
is filing the return here. Now he doesn't have money. So that means he has to sell that asset, bring the money here, and then pay tax. So that means 60-40. 65, let 60% the government take, 40 I will keep. For
Mm.
all the non-disclosure, I want to keep that 40%. So rather than losing, because tax, interest, penalty, and prosecution also possible in case we don't come under this voluntary scheme. So prosecution and penalty can be avoided by paying 60%. So that means
So,
entire asset will be gone. Entire asset will be gone, and people have to face consequences also. So free boarding and lodging.
mm. Now, when I give a declaration, there are certain unintended clerical error or mistakes happens, or the revisional authority makes some revision in this. What are the relevant provisions or rules under the scheme with respect to the rectification and revision or relief in respect of already assessed one, where under the scheme how that is addressed to?
Yeah, form one when we file, if at all we make a mistake, say for example we put an additional zero in valuation. So it will have a
Implication.
complication. Ramification is different. So therefore, as of today, there is no provision for filing a rectification. So therefore, form has to be properly filled and filed. So who prepares the form? Offline, download the form, fill it up. Then again, before you upload it in online, you fill the form. Save the form, take a printout, verify one by one, then upload it. So directly filling, uploading is not advisable. take a form, fill it up offline, know the consequences of the tax amount, then fill it online, save it, then take a printout, verify. Then ready, keep the money ready for taxes, or maybe maximum 20 days, 30 days. We can keep a cushion of maximum 60 days time to get the money. So, or better to keep the liquidity and then file. That will be the best option. I repeat, keep the liquidity and file so that temporarily you can keep the money in 30 days fixed deposit for interest. So, let the order come, take the FD and then pay the tax. So, that will be the ideal situation.
Raju, in the entire scheme, if I declare and pay the amount and come clean, what are the other immunities specifically mentioned in this particular scheme?
Immunities, there won't be any penalty.
Oh,
There won't be any penalty. So straight away, it is a 60% tax, which is
okay.
already there in Income Tax Act. So it is tax 30% and additional tax 30%.
So if an assessment process is in continuation and it is pending, in respect to black money, you clarify. An assessment is pending. Whether a declaration can be done, you clarified. Initiation of the proceeding is not a bar. It is only the completion of the process. They
Exactly.
cannot go for the scheme.
So
Whether that
therefore,
is
they
applicable
can
for
actually avail this scheme and intimate this to the assessing officer. And assessing officer will incorporate that in his assessment
order itself.
order. So he will not go into that particular area. This has already been declared and tax is paid. So his headache is over. Katam.
Now you highlighted about the eligibility, person, asset, income, various year, form 1, form 2. To whom this scheme is not specifically applicable?
So non-resident, for example, I'll give you a corollary. A corollary is those who are, say for example, 2016-17, for past 20 years, a person is in Australia. So he was a professor there. He got the salary there. He paid tax to Australian government. He bought a property there. And after retirement, he and his wife, he came and bought a property from the retirement benefits, maybe in Chennai somewhere, and he settled here. But he has an Australian property which he is let out. Now he is resident here. Now, is this scheme applicable to him? In the income tax return, since he is a resident, he will declare that property. I have a property in Australia, address, samachar over. So, for him, it is not applicable. So,
So
if at all a person,
non-resident acquired out of foreign earnings is not applicable. It is only accessibility arising in India that is specifically to resident and resident not ordinary resident. Whatever be the year of purchase, one has to come clean with respect to assets predominantly, and also for the equally for the income earned and kept in elsewhere. Now, very nicely within the given time, you have covered major aspects in a very nice form. There are questions or somebody has mentioned it which I am unable to see. I hand over the proceeding back to you, Dr. Raju. Thank you very
yes,
much
sir.
on behalf of all the participants. Address some important one or two questions within the given time.
Yeah. So, we have Anita has asked some question. Without filling updated return, can I file form 1 and clear all my dues? Yes, you can do that. Updated return is different, okay, because this is for your past. For example, updated return, you can only fill it, you can file it for 4 years. What is 4 years? You are in 2026. For 22, maximum you can file it. Now, these assets belong to 2015-16. So therefore, you can file form 1 and come clean. So good point. So we have Mr. Ramesh who is asking a question. In a particular case, there is undisclosed income as well as assets. Is income earned which is not declared and the income is used to create an asset? In this scenario, what will be the tax rate? Actually, income plus assets you have to take. So we have to understand how the cash flow is. So for example, we have 1 million and out of that 2 lakhs is in bank account and maybe 8 lakhs is actually in the form of an asset. You have to add the bank account 2 lakhs and 8 lakh fair market value you have to take. So it's a very interesting question. So there is undisclosed income as well as assets. So if you
There's
read the particular 133 form, I mean the section, it says very clearly the aggregate value of the undisclosed asset located outside India and the undisclosed foreign income put together does not exceed 1 crore. So that is how they say. So it's a very vital, relevant question, Mr. Ramesh. And can we declare under both the classes 15 lakhs under first class for undisclosed income and 3 crores under class 2 for non-disclosure and IT return? No, no. So schedule FA is the particular year's disclosure. This is for old. For example, if you have an asset which has been acquired and you declare it, fine. These are all assets which have been acquired legacy assets and legacy income is what we are discussing about. Okay, not the current year assets and income and carry forward. So the services, I don't know. Okay, I think yes, this is the question. The company is having negative net worth and there's no value and holds very less shares which were forgotten. Will this also will go in compounding? Actually, yeah, that means your fair market value is a nil or negative. So then there is a question of tax or penalty or compounding here. So technically it is a loss. Okay. So that means you have spent it. A resident Indian providing consultancy to foreign company and as appreciation they gave shares at $1 and he did not disclose this. Be disclosed now in ID return and later in scheme. Ah, yes, it's possible. But what is the value of it? Is it so less? So then, even if it is a less amount, you can directly what do you call it as in the financial year in the income tax return, regular return, you can disclose it. So this is actually a very small amount, but wish to you want to declare it, you can declare because to the extent of 100 rupees only it will come. Okay, so income was earned in Dubai when assessee was deemed resident but not ordinary resident. Whether he has to disclose asset acquired out of such income. See, very clear is when the income was earned in Dubai, the person, the assessee should be resident in India. I repeat, resident in India. Then only the disclosure and payment of taxes will arise. Otherwise, it will not. I think, yes. Assessee has earned capital gains income by selling ESOPs allotted. Our ESOP gains was declared on net value after netting of franks TDS. To this extent, is there a non-disclosure of income? Actually, you have to say whether he is a resident. As of now, he is a resident, but at the point of ESOP allotment, whether he was resident here, then only non-disclosure and taxability will arise. I am presuming that he is a resident here and he earned capital gains. Now he has actually paid tax there. The only thing is he should have made a disclosure here. So our ESOP gains was declared on net value after netting off. Okay, so that means he has already declared here. So there is no non-disclosure. He's already made the point clear. Resident Indian working for US company in Bengaluru receives shares of employer company in addition to salary. Correct. Value of the shares can be declared as income along with salary. Actually, maybe if he has not declared in his Indian income tax return, okay, because it is a foreign asset, better to declare now and come out clean. Okay, you can avail this scheme. Actually, this scheme is only brought out only for the such kind of assessors. So we have what do we declare as value of asset? If all the assets have been liquidated in the next year itself and nothing is remaining as on the day of March. So this is the question. So you don't have an asset as of now. So that means you are a good boy. Okay. So what government can recover from you? So in case you want to declare your undisclosed income and you want to pay tax, now you can do that. Okay. But there is no meaning in it. So thank you very much, friends. I think a few more questions are there. Whether FA scheme available? What is this question? I don't understand. A resident receives ESOP. Income was offered to tax in all the years along with salary. However, asset was not disclosed. The same is disclosed in 25-26. Very good. So actually, you have already complied it. Not disclosed is what you have to come here. You already disclosed. Good one. Good. Retired from foreign, no foreign assets, only jewelry worth 5 lakh, which I brought to India. Do we need to declare? No. So you would already disclosed at the time. The baggage rules, you would have disclosed it. So that is fine. So can we declare under both the clauses? I think this point we already discussed. So thank you very much, friends, and keep supporting our initiatives of GKR and VVS in coming days also, and we'll come out with new topics every now and then. Thank you very much, and best of luck to each and every one of you. And thank you very much for all for participation, and special thanks to VVSG for joining today. And I leave one line, two line to VVSG for his closing remarks. Over to VVSG.
Thank you, Dr. Raju. It is not a newer topic, it's a trending topic, hot topic of the day, and it is relevant. And I'm very happy to enrich my knowledge with your presence. The same feeling might be with the all the participants, and nicely, pointedly clarified. If the trend or the need of the hour is such that there is a need for a separate online or a physical session, you should not hesitate to share your expertise in this knowledge for the benefit of our all participants. Thank you very much, my dear participants, and Dr.
Thank
Raju.
you.
Thank you.